Now, over the past few weeks and months, there have been some significant developments involving the Iraqi dinar and its role in the global economy. For starters, the U.S. government has issued warnings about Iran's growing influence in Iraq, particularly how this affects Baghdad's diplomatic and economic relations. U.S. Secretary of State Marco Rubio recently made public statements highlighting concerns about Iran's expanding power in Iraq. This kind of geopolitical tension naturally impacts currency markets and investor confidence, so it's something to keep an eye on. At the same time, the Central Bank of Iraq has announced that its recent measures are helping to lower the exchange rate between the Iraqi dinar and the U.S. dollar. What's interesting is that officials say this decline isn't just temporary, it's part of a deliberate strategy to strengthen and stabilize the currency over the long term. So, when you hear about the lowering exchange rate, it means the value of the dollar relative to the dinar is dropping, which generally indicates the dinar is gaining purchasing power. This is a positive sign for anyone holding or interested in investing in the currency. Adding to this, the Iraqi dinar has recently been listed on international trading platforms. While it's not yet actively traded on a live basis, this move signals that the currency is being positioned for future global trading and exposure. It's a major step toward integrating Iraq into the worldwide financial system. But here's an important point to remember. Iraq's vast wealth doesn't automatically translate into a valuable currency. Currency valuation is influenced by many factors including political stability, government fiscal policies, inflation control, and public confidence. Speaking of economic growth, Iraq is gradually emerging as a banking and financial powerhouse, both within its borders and on the international stage. This progress is critical because a strong and reliable banking system is essential for attracting foreign investments and encouraging domestic business growth, which in turn supports the value of the dinar. On a related note, Bank of America recently made an important announcement regarding new exchange rates for the Iraqi dinar and the Vietnamese Dong. This news has created a buzz among investors and currency traders because it reflects growing confidence in both countries' economic prospects. So what does this mean for you as an investor or trader? Is now the right time to buy or sell? Understanding these changes and their potential impact is crucial for making informed financial decisions. Let me give you some background on these two currencies. The Iraqi dinar is the official currency of Iraq, and it has been in the spotlight for years due to the country's political and economic changes. Meanwhile, the Vietnamese Dong is Vietnam's currency, and Vietnam has become one of the fastest-growing economies in Southeast Asia, attracting global attention for its development and export potential. Bank of America's decision to adjust the rates upward for both currencies suggests that economic conditions in Iraq and Vietnam are improving. Specifically, the bank raised its conversion rate for the Iraqi dinar, signaling increased confidence in Iraq's economic recovery. This move might encourage more investors to consider the dinar as a viable investment option. Similarly, the Vietnamese Dong's rate increase reflects Vietnam's rapid economic growth and successful government initiatives to boost exports and attract foreign investment. Southeast Asia as a region is benefiting from globalization, and Vietnam is a key player in that dynamic. For investors and currency traders, these rate adjustments could mean that now is a favorable time to invest in the dinar or dong, potentially leading to profitable returns in the future. But it's important to remember that currency trading always carries risks. Market values can fluctuate due to various factors including political events, economic data releases, and global economic shifts. That's why staying informed, doing thorough research, and carefully managing your investment risk are essential. If you're new to currency trading, here are a few tips to help you get started on the right foot. First, take the time to learn about the currencies you're interested in. Understand the political and economic factors that influence their value, such as government stability, inflation rates, and economic growth indicators. Second, create a budget for your investments and stick to it. Never invest money you can't afford to lose. Third, diversify your portfolio to spread risk across different assets rather than putting all your money into one currency. Fourth, consider consulting with financial experts to get professional guidance tailored to your situation. Finally, keep yourself updated with the latest news from reliable sources and financial institutions like Bank of America, as their announcements can have significant market impact. Now, you might have heard the term deleting zeros in relation to the Iraqi dinar. What exactly does this mean? Essentially, deleting zeros refers to a process where the central bank removes zeros from the currency notes to make transactions simpler. For example, a 10,000 dinar note could be replaced by a 10 dinar note. The key point is that the real value of the money doesn't change. It's just the way the currency is denominated that becomes easier to use in everyday transactions. This process is especially important because Iraq has faced significant economic challenges over the years, including high inflation that eroded the dinar's value and made it less reliable as a store of wealth. By deleting zeros, the central bank aims to restore public confidence in the currency and promote greater economic stability. The governor of the Central Bank of Iraq has expressed optimism that if this process is carried out carefully and correctly, the dinar could regain much of its former strength, perhaps even becoming stronger than it was before 1980. Back then, the Iraqi dinar was one of the strongest currencies in the Middle East and a symbol of economic stability and national pride. For the average Iraqi citizen, a stronger dinar means more purchasing power and price stability for goods and services. It could translate into a better quality of life, as people are able to buy more with the same amount of money. That said, there are challenges to this process. One of the biggest hurdles is ensuring public trust. If people don't believe in the new currency or misunderstand the changes, they might resist the transition, which could undermine the whole effort. Timing is also critical. The government needs to carefully plan and execute the changes to avoid disruptions that could cause economic instability or confusion. If the project to delete zeros and strengthen the dinar is successful, the benefits could be enormous. It could attract much-needed foreign investment, stimulate local businesses, create jobs, and improve living standards across Iraq. In the bigger picture, this initiative is more than just a financial adjustment. It represents hope for a brighter economic future for Iraq. It's an opportunity to rebuild trust in the currency and the country's economy, paving the way for long-term prosperity. Thank you for watching and taking the time to understand these important developments. I'd love to hear what you think about the new exchange rates for the Iraqi Dinar and Vietnamese Dong. Are you thinking about investing in these currencies? Please share your thoughts in the comments below. If you found this video helpful, please give it a thumbs up, share it with your friends, and subscribe for more updates on finance and investment topics. Remember, knowledge is your most powerful tool when it comes to investing. Stay curious, keep learning, and always be on the lookout for the best opportunities in the currency markets.